Now it's time to cross over to our OCR for global insight and an in-depth look at important developments in world affairs.
Thanks, Mark. That's right. It's time for Global Insight. Now, South Korean drama Squid Game might be fictional, but the socio-economic backdrop of the dystopian Netflix series is very real. Household debt in South Korea was at a record 1.8 quadrillion won, or $1.4 trillion as of June this year, amounting to more than 100% of the country's economy. As the COVID-19 pandemic displaces livelihoods and property prices continue to soar, the debt-to-GDP ratio has jumped 112.4% on year, growing at the third fastest rate among 43 countries, according to the Bank of International Settlements. So can monetary and fiscal policies really stabilise the country's out-of-control debt problem? To address these issues, we connect with Jongsung, Professor and Chair of Economics at Bryant University, and Jeremy ZOOK, Director of Sovereigns at Fitch Ratings. A very warm welcome to you both, and we've got a lot to cover today, so let's get started with you, Professor Kim. The current level of household debt here in South Korea, it's larger than 100% of the country's GDP, and in fact it's ranked the sixth highest among 43 countries, according to the Bank for International Settlements, and again it's growing at the third fastest rate out of all those countries. So first of all, why is South Korea's household debt level so high, and why is it growing so aggressively?
Well, the most conspicuous aspect of Korea's household debt is the speed of rising, and this is quite alarming. Well, what happened was after the Asian financial crisis, and Korea's economy was stagnating. And there was a big concern that Korea may enter a deep recession period, much like Japan. So the interest rate was kept very low, and this kind of stimulated the real estate market. So this is a quick way to economic recovery, but it turned out to exacerbate the household debt, as we know. And also what happened was the relaxed regulation on new credit card issuance. So people they overspend on their credit cards. And one other thing is the financial institutions and the business model was shifted from the business clients, corporate clients, to the individual clients. So people they began to borrow lots of money and to buy new houses and all that. And most recently, we have seen a rapid rise in household debt. And this is largely due to increased borrowing to make ends meet during the coronavirus pandemic, and to fund the real estate purchase and the stock investment, and taking advantage of record low interest rates.
Let's go to you, Mr. ZOOK. There's a high amount of household debt here in the country. We're at an unprecedented level of 1.8 quadrillion won. How do you assess South Korea's fiscal soundness right now, given the country's soaring levels of household debt?
Yes, good morning. As you mentioned, Korea has seen quite a rapid increase in household debt levels, and that, in our view, is a result of something that we've also seen a bit globally as well: low interest rates and a relatively constrained housing supply, and that's put some upward pressure on housing prices, and of course then feeding through into household debt levels. Now, from a sovereign ratings perspective, this is something that we watch quite closely because high levels of household debt and particularly rapid increases in those levels can have spillovers to the economy, spillovers to the financial sector. So it is something that we watch quite carefully. But in that regard, a lot of highly rated sovereigns do have relatively high levels of household debt. I think in the case of Korea, while this is something that we are paying close attention to, our view is that households in Korea still do have sufficient buffers to help them service their levels of household debt. And the financial sector, in our view, is still relatively well positioned to manage any downside risks that could come from these high levels of household debt.
Right, so it's something to watch, but we're not on red alert just yet. And real estate, housing prices have certainly made headlines here in the country, Mr. ZOOK. Now, South Koreans put the lion's share of their wealth into property rather than stock investments. And property prices, they've continued to soar over the years, almost doubling since 2017, despite the current government's more than 24 price control measures, including hefty taxes and lending restrictions. Do you think this is a rather rare phenomenon in the world that's rather unique to Korea?
I wouldn't say it's a rather unique phenomenon to Korea. Certainly the increase in housing prices in Korea has been quite substantial relative to other countries. But we've seen during the pandemic, low interest rates globally and high household savings have really led to households around the world putting their money into housing as an asset. We've seen this in the region, in Australia, in New Zealand, as well as more globally in Canada and the US to a degree, and many countries in Europe where because of these ultra low interest rates, households are channeling their savings into housing as an asset. And so that's led to rapid increases in housing prices, not just in Korea, but globally as well. So while the increase in Korea has been quite dramatic, I wouldn't say it's too far out of line with some of the pressures that are emerging, in other countries that are in similar circumstances.
But it has been quite remarkable how at least 24 property control measures have failed to really get those prices down. And Professor Kim, many critics say that the government has failed to really stabilise the prices over the past 5 years. And that's been partially blamed for the current household debt crisis that we're in. And even though the government implemented a series of regulations, including a lot of taxes and lending restrictions, why did these fail to work?
Well, I think the policies are misguided. And then in the first place, and then the underlying cause is the economic insecurity and anxiety. So Koreans spent a great share of their household assets into real estate. And because they see them as a safe investment vehicle for retirements, and the people live much longer these days. And the people are actually behave rationally. And because this behavior is driven by the fact that around 40% of the Korean citizens over age 65 live in relative poverty, which means that they earn less than half of the median household income. So we talk a lot about the realty invincibility, and then in Korean, this is 부동산 불패, realty invincibility, right? And this brings the situation that more people, and even including young people in their 20s and 30s, and have joined the move to buy apartments by taking out mortgages and credit card loans. So those policies were implemented, many policies were implemented, and some argue that regulations were incorrectly implemented or calibrated. And the politicians promised to roll them back if they are elected for political position. But to me, they are mostly political rhetoric. So these policies does not reach the root of this anxiety-driven market behavior. And I think personally, a more sensible or more productive policy, the responses should involve the more fundamentally, like the dismantling the structure that perpetuate occupational or labor market security in general.
So serious structural measures are needed to really tackle the root cause of the problem. And Professor Kim, the Bank of Korea is expected to tighten its monetary policy this month. Do you think its series of rate hikes are going to help stabilise this spiralling debt situation that we're in?
Well, recently, BOK rose the interest rate by 25 basis points. So now it's 0.75%. And the monetary policy of any central bank should be carefully implemented. And because there are so many macroeconomic implications and consequences. So, for example, higher interest rates, surely raise the borrowing cost of a lot of funds, and this will discourage a group of people from taking out a loan. So this can address a portion of household debt problem. But what about those people who are already indebted? So those heavily indebted people may default on the loans, and this may be a harbinger of even greater risk. And also, in Korea, the private sector's vulnerability to the interest rate is pretty serious. So from business point of view, and there are the group of marginal producers. So those people who are barely profitable enough to survive and with very thin the operating margins. And then they will be forced out of business, and if they cannot afford to this financial cost. So for consumers or producers and all, and the weakest links gets broken first. And also, if the interest rate rises and then people think, and then the reason is the addressing the household debt, and then this is kind of admitting a weakness. So this may send out the wrong signal. But then again, and then we are in the middle of a coronavirus, and then the possible resurgence, and then stock market uncertainties, and the rising trends of household debt. So when it comes to monetary policy, and timing is very important, but preemptive contractionary monetary policy is risky and a little premature.
Right. So you're
That's my thinking.
so you're saying that it's uncertain whether this is really going to bring down those debt rates, and also it's not going to be a magic solution for all our economic problems. Well, Mr. ZOOK,
you're right.
Right, and well, I want to hear your opinion on this, Mr. ZOOK, as well. What do you think will be the effect of the Bank of Korea's rate hike expected to be introduced this month? Do you think it's going to help at all with the spiraling debt situation?
Yeah, we do see one more rate hike this year and two rate hikes next year. So a rather substantial tightening in monetary policy. And our view is that this should start to have an impact in moderating house prices. Although I think there are some underlying structures in Korea's housing market that may sustain increases in housing prices, but nevertheless the growth rate should start to slow a bit more.
Professor Kim, South Korea plans to spend a record 604.4 trillion won, or $519 billion next year, and that's almost 10% more than this year's budget. What do you make of this aggressive spending plan? Do you think the country's overshooting, or do you think the increased spending is necessary for recovery?
When it comes to fiscal policy, if and when necessary, and government should implement a serious, appropriate expansionary fiscal policies, such as this. So during the process, and to some extent of overshooting can happen, and it is inevitable, and we can't always follow a stable path. And I see the recent budget package as the sort of balancing act, and between putting and injecting funds into the badly needed social services to tackle an aging economy, and reduce rising income inequality, and relieve the household debt, and while avoiding the adding further strain on the economy's finances. So when it comes to the pandemic relief package, and we really need appropriate targeting. So according to statistics, and then the bottom 10% or bottom 20% of the population are indebted, and then they need to borrow money and to eke out a daily living. So more spending on lower income people, bottom 10% or bottom 20%, and should be emphasized. So this will also contribute to poverty reduction. And if government is willing to spend that kind of money, and I also advise some form of debt relief. Okay, so we may relieve some debt for the certain group of people. But unfortunately, this kind of policy may create a moral hazard. Okay, if I'm not paying, and then nobody's going after you, it's me. So all in all, the fiscal policy versus household income or debt, and this is a really complex and a multifaceted problem. So unfortunately, there are no sudden miracles to reduce household debt immediately in Korea.
Right, so it is a
However,
very...
but with the proper...
Yes, it is a very complex problem having to manage this tightening of monetary policy while making sure that households, they can get by. And finally, before we go, Mr. ZOOK, you forecasted a 4% growth in 2021 and 3% in 2022. What do you see as the opportunities and risks for the South Korean economy?
So our growth forecast for 2022, as you said, is 3%. And we think a key driver of that will be the relaxation of social distancing measures. As vaccination rates have increased rapidly, we think that will help support household consumption as households can go out and spend again on services and those types of economic activities. In terms of exports, I think this is really Korea's key opportunity in terms of economic growth. I mean, this has been one of the most supportive factors of Korea's outperformance compared to many advanced economies during the pandemic. We've seen Korean exports perform very well in terms of semiconductors, other electronic goods that consumers around the world have been demanding. And that's had impacts then on domestic investment as well, boosting investment rates. And so I think our view is that exports will the growth in exports will begin to moderate a bit more as the global economy comes off of its sharp rebound from the pandemic. But Korea, because it is a semiconductor producer, and we do see disruptions in the semiconductor supply chains, semiconductor chip shortages, we think Korea is still relatively well positioned as a strong exporter in that market specifically.
Well, this is where we're going to have to wrap up this interview, and that was Jongsung, Professor of Economics at Bryant University, and Jeremy ZOOK, Director of Sovereigns at Fitch Ratings. Thank you so much for joining us.
Thank you.
Thank you for having me.